Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Doug Mackenzie, and on today's session, we're going to be looking at how you build a bank from the ground up. And joining me today, I have two guests right at the heart of that situation. We have Oaknorth's Valentina Kristensen joining me here today. Valentina, how are you doing here this Friday morning?
I'm very well, thanks. Yeah, thanks for having me.
It's absolutely our pleasure. We love having Oaknorth on the show. And just in case some of our viewers don't know, could you tell us a bit more about yourself and Oaknorth, please?
Yeah, sure. So I'm the Director of Growth and Comms at Oaknorth. I've been with the business full-time since summer of 2016. Prior to that, I was working with Rishi, co-founder and the founders for about a year previously, consultancy side. For those who may not come across Oaknorth before, we're an enterprise software business, so we specifically focused on commercial lending. So we help banks around the world to lend more effectively to what we call the missing middle, or businesses that are the sort of largest and most significant contributors to economic and employment growth, but still struggle to access fast, flexible debt finance. We also have our own bank within the UK, Oaknorth Bank, which we deploy the software in. And Oaknorth Bank launched in September 2015. To date, it's lent about £6.5 billion to businesses across the UK. And then, as I said, outside of the UK, we license our software, and some of our customers are Capital One, Fifth Third, PNC, SMBC, ABN AMRO. So working with some of the largest and most innovative banks around the world as well.
Amazing. It's such a brilliant organization, and it's really obviously had such a time to shine over the last 19 or so months as well. And also joining us, we have Andy Renshaw from Feedzai. Andy, thank you so much for joining too. How are you doing?
I'm doing very well, thank you.
Amazing. I kind of felt like I was a bit of Joey from Friends there, but Andy, I've got to ask, could you tell our audience a bit more about Feedzai and what you do there, please?
Yeah, so I head up our product management team. From a personal perspective, my background is in banking. I grew up at Capital One, that's how I phrase it. I was there about 11 years, and then also worked at Citibank and Lloyds Banking Group. I guess what I do at Feedzai is I make sure our product is right for our customers and right for the market. And in terms of what Feedzai does, we're trying to be at the cutting edge of AI and machine learning in a financial risk context. So that means working with global banks, fintechs, challengers, delivery platforms, processors, in making sure that we can protect their financial risk and ultimately financial crime. And when I think about it in a softer side, I think ultimately we're trying to bring trust and credibility to their solutions.
Yeah. I think that's going to be so critical with the changing role of a bank going forward. It is that trust word. It's going to be so pivotal. So both of you, thank you so much for joining. Now, we're seeing neobanks in Europe and the UK looking to associate themselves with a particular cause. I think having that identity is quite important. Valentina, I've got to ask a bit more about Oaknorth, and you've kind of touched on it slightly, but that mission, I think, is that critical for a bank going forward in today's ecosystem?
I don't know if it's critical for every bank, but certainly for Oaknorth, the empowering the missing middle is our mission, and that is something that really was driven by the experience that our founders Rishi and Joel had. Their previous business, Copal Partners, they founded that business in 2002. They did financial research outsourcing. And in 2005, they were looking for debt finance to scale their growing business. They were high growth, they were profitable, they had a great list of customers, but they kept getting the same response from every bank, which was, the computer says no. And that was obviously very frustrating, and was an experience that stuck with them. Fortunately, they were able to get a dividend recap from one of their customers at the time, a few months later, or from the special situations desk of one of their customers at the time. And were able to scale that business to 3,000 people across 13 markets and sold it to Moody's Corporation in 2014. And that was really what inspired the launch of Oaknorth, a business that could help other businesses and other entrepreneurs who are probably in a similar position as they were then. These aren't sort of startups, more scale-ups, I would say. Those businesses that have a sort of tried and tested business model that have reached profitability, but are perhaps not looking for a debt quantum that's large enough for the traditional high street banks to really spend the time to design a bespoke facility for that business.
Yeah.
So we do it, as I said, through Oaknorth Bank in the UK, and then the technology that we've developed helps with the credit analysis, the portfolio insights, and the portfolio monitoring. So really unlocking some of that efficiency at the back end to give your relationship managers, your credit analysts more time at the front end.
I mean, it's so important to a lot of organizations, and I think it almost sums up fintech as being able to offer up these services that have been effectively maligned for the previous 200 years, and being able to offer that as a mission, to know that it's part of your core and it's always going to be a strong offering. To me, it's so important to your identity. But then I guess, Andy, then you've obviously had experiences at Capital One, and then on to the other animal, almost like the Citigroup. I'm interested, is there a mission that you saw for instance, at Capital One, and do you think it's also pivotal for a lot of neobanks?
Yeah, answering, I definitely think a mission is vital. I guess externally it's a crowded market, so differentiation is obviously valuable, and simply doing that around the nature of the financial products, I think, no longer really resonates. And if you're not careful, all it really does is drive a race to the bottom.
Yeah.
What was interesting was actually my experience at Capital One was around launching into the UK market, and we launched a single product and we did compete on the financial side, but actually it was done in a way of trying to disrupt the big players, and the language around that was, in essence, was actually bringing something for customers. So we didn't undercut by 5-10%, we undercut by 50-60%. So we completely disrupted the market with some of the rates we were offering around credit cards. Yeah. And we've touched on the other side as well, which is delivering to people that wouldn't otherwise get credit cards, get financial products, and that was a core essence of how we entered the UK market. So I think it helps there, but also I think it helps internally. I think it helps with employees that are there, and I think it helps attract employees as well that see a real clarity of calls in that sense. And I would say some of the larger organizations I was in, inevitably that gets a little bit lost. Often there's multiple causes, or there's causes by department, or there's causes by product line, and sometimes that clarity can get a little bit lost in larger organizations. So I wouldn't say it's not there, but sometimes there can almost be too many, and actually working out where and how to almost bring those to the top can be very, very difficult in larger organizations.
Well, you've brought up a really interesting point that, and that's talent, and the kind of the war on talent going on currently when it comes to digital roles is absolutely mad. So with that in mind then, Andy, do you think that rather than just having a mission that can attract talent, you've actually got to have more offerings to kind of show that banking doesn't have to be done in the same way to attract that talent? Because I imagine just trying to attract talent to a bank may present itself with its own difficulties. Is that correct to say?
Yeah, it's certainly correct, and we're seeing those struggles. Feedzai is a fast-growing company. We're probably growing our headcount. Trying to think of the numbers quickly, but at least by 25% year on year. And I guess there's a number of challenges around that. One is actually your company changes internally, so you how you keep people on that journey with you that are already there is actually a key part of the challenge as well. If they joined a company that was 50, suddenly it's 500. That's not the same company. So actually, there's often an internal talent challenge that needs to be addressed. I would say externally, it's less about the hard nature, if you like, of the specific offering. And I would say probably it's more about the reason that offering exists, or the nature of the problem you're trying to solve, or the method and the culture by which you want to solve it. I think often it's certainly my experience as a hiring manager in product is actually people have come for the soft side of it, the desire for growth, the desire to participate in an arena like AI and machine learning, and the desire to do something different. It tends to be less about the specific things we're doing day to day, has been my experience.
Yeah, and Valentina, do you agree with that? Do you think that there's always been this kind of, it's always been done this way, and we're seeing that starting to be erode, and is that enabling growth for neobanks?
Yeah, I think ultimately, you have to be a certain type of person to want to join a challenger bank or a startup. a fintech startup, obviously a lot of people will want the stability of going to a very established organization. And I think actually Capital One is one of the very unique, large established players that has clearly been at the forefront of, fintech and innovation, for decades. So it almost probably feels a bit like there's lots of startups within an established business, but for many people, obviously, and I think back to when I first joined Oaknorth and started working with Rishi and Joel in the summer of 2015, we were in the mobilization phase. We didn't even have our banking license yet. Sorry, we didn't have our full banking license yet. We had it with restrictions, and we wouldn't launch fully until September of 2015. And then I was seconded and joined full time in 2016. And for me, the idea of building something from scratch, and at the time we were about 40 people. Now we're 800 globally. Was something that really appealed. But for many people, the sort of the lack of process, the lack of structure in a lot of ways doesn't necessarily appeal. But for me, it was something very exciting to build from scratch.
Yeah.
And I think the mission was something I can get behind because my mum is an entrepreneur. I've seen firsthand, the challenges that she's experienced, as someone who's starting and growing a business. So for me, the mission to empower the middle really appealed. But of course, with 800 people, it's not like everyone's going to have a personal reason. It may be that actually, it's the people, and they really love, they really want to learn from those people, or the founders, or just want to go somewhere different, right? Maybe they've been at RBS or Santander or Lloyd's for, a few decades, and they're keen to join a new bank. So I wouldn't say that, having a mission is essential for hiring, great talent, but I think, it definitely helps. And then certainly in Oaknorth's case, it has helped as well to attract some great people.
Yeah. And it's imperative, really, as you kind of mentioned and alluded to, for that scale, for that growth to 800 people, for instance. Andy, with that in mind, then, we've seen obviously neobanks become established all around the world, even in the States, across the whole of Europe as well. But now we've kind of got those ingredients. We've got the mission, we've got the people behind it. How do you go on? And how do you see that the kind of the fintechs of the world, the fintech banks of the world, apologies, go on and actually gain market share? Because I always remember, when I first embedded in the industry, it was very much like, the large institutions that it's all gone Pete Tong. Then suddenly, you're having the fintechs becoming banks themselves, and we're seeing this changing dynamic. But now we're in this situation that we are almost post-COVID. I hesitantly say. How can these neobanks, these challenger banks, go on to expand and actually gain market share?
I think as well, there's another interesting, I see kind of two dynamics. It's exactly that. It's in the fintech banks trying to gain market share. The other thing that really interests me in the space right now is we are seeing those established players create their own fintech banks. And actually, when I was at Lloyd's, I had the privilege of working on the products of, they're almost trying to eat their own lunch, but compete with themselves. And actually a number of organizations we work with are actually the fintech versions of the larger players. So I think that is a real threat to, if you like, the true fintech banks, that if they're not careful, they'll get disintermediated by the larger players. I actually don't think creating market share is that difficult. I think it's sustaining it in a profitable way that's compelling for the customer and compelling for the organization. We're seeing a number try the subscription model, which I really like. They're trying to create a more compelling monthly or annual type fee service, but it's a service. So it'd be interesting to see how that plays out. That's one kind of clear model. I think the other one we're seeing is very simple reward type structures. And I think a number of larger organizations have rewards, but they become very complex. Maybe they've layered things on things, but or maybe they've removed areas where those rewards weren't good for the organization, and you're left with a slightly diluted offering. So certainly I would say rewards, subscription, but different ways of essentially creating a financial proposition are the way to go. I wouldn't be so bold as to predict whether they'll be successful or not. If I'm honest with you, I don't feel like I'm close enough, but certainly as somebody involved in almost trying to make sure that those offerings remain credible from a risk standpoint, I think I'm probably I couldn't describe myself as anything other than a close observer to see how they play out in terms of long-term profitability. I won't be able to comment beyond that.
No, but it's the crystal ball question, isn't it? I mean, if everyone had that answer, Andy, I think we wouldn't be here. We'd be off in the sunning on a beach somewhere. But with that in mind,
and I also think it's interesting is what's going to sustain. I think the things that are what I can't remember what the old phrase is, but there's this golden rule of what got you to where you are is not going to get you to where you want to be. And I think right now, in many ways, with some of these organisations, we're at that inflection point of they're realising that what got them there, they now need to evolve and adapt. And that's, I think, a really exciting time over the next actual kind of 5 to 10 year period.
I mean, I think though there's also the risk of sort of going down the rabbit hole of over diversification, sort of chasing the valuation rather than the value that you're actually delivering for customers. And you see this from a lot of the new neobanks and challenger banks, sort of, let's do this, let's do that, let's do cryptocurrency, let's do crypto exchange, let's do selling gold, etc. And it's and sort of trying to be all things for all people. And actually, sometimes it's better to double down and say, okay, how can we basically do what the iPhone did to the rest of the mobile phone market, right? Because create something that's so much better that it basically replaces what was there previously, and you can't even imagine life without it. So it's really trying to create something that's 10x better, not something that's sort of incrementally better, because then, to your point, Andy, the big banks can come in and either replicate those features because they are just features, right? Or build their own ones. Whereas if you sort of double down and invest on doing this thing really, really well, so exceptionally better than anybody else in the market, not only will you create an exceptional customer experience, but you're also going to give yourself the moat that will give you that competitive advantage. Is just going to get wider and wider and deeper and deeper.
Yeah, I think it's a great summary. It almost has to be so far over in terms of the nature of the outcome and the offering, to your point, that they can't simply pivot and kind of sweep up along the way. Certainly one of the things I remember from my time at Capital One, where Capital One was very good and probably still is very good, is they took a very data-led approach to an experiment. So to your point, Valentin, if it wasn't working, they knew exactly on what basis they were going to kill something, and they killed it quick and they killed it decisively. So they almost knew how distracted they were going to be, and didn't allow almost the emotion or kind of a slightly kind of, that being wedded to something almost take them too far down that rabbit hole. They knew exactly how deep they want to go. And I thought that was I think that's one of their strengths really as an organisation.
So a really interesting thought, because I've been on a panel recently where we were discussing embedded finance, and it was kind of this debundling of financial services, rebundling, and then also disseminating them again. And if you create a proposition, Valentina, as you're saying, that targets such a perfect niche, and then you start offering various other financial services, do you become the very thing that the fintech bank was trying to not become, and become too laggard, too slow? And I think that's really interesting. And I kind of want to explore that further by, we've obviously discussed Oaknorth's mission before, but I'm interested, I know you brought on, I think it was 2016, you said, what were some of the obstacles that you didn't face effectively at Oaknorth, because you were starting from a certain point where digitization had taken place, cloud technology had taken place. What was that like? Was it a very different experience to how you could imagine some of your the other large institutions that are offering business lending were having to face at the same time, and you could roll out brilliant new services? I'm really interested to hear that how that went down.
Yeah, sure. So I think I guess there's sort of two parts to that. One is from the outset, Rishi and Joel wanted Oaknorth Bank to be a fully cloud-hosted bank. So not just ancillary services like email or CRM, but actually all the way down to your core. And that wasn't a possibility at the time of launch in September 2015. But then Oaknorth sort of worked with AWS, our cloud provider, and the regulators to help essentially Oaknorth Bank to become the first UK bank to be fully cloud hosted in May 2016, and that sort of helped pave the way for other banks. Obviously, since then, the likes of Monzo, Starling, Atom Bank have all become fully cloud hosted as well. And what that's enabled us to do is obviously, as you say, bring new products and services to market very quickly. We can scale up and scale down as needed. We're only sort of paying for the sort of service base that we need, rather than sort of having to pay a bulk sum, and if we don't end up using it, it's sort of just a waste of money. But also in terms of cybersecurity and operational resilience, the ability to rebuild our core in a new location within a matter of hours is obviously something that is not possible for the traditional high street lenders with their legacy technology. Kind of comparing spaghetti with lasagna, like nice versus this sort of muddled spaghetti structure that you'll find in those organizations. And I'd say the second piece is, in addition to sort of being fully cloud hosted, is the fact that whilst building our tech stack, we were willing to be first movers with a lot of the partners that we worked with. So Mambu and Sino, I think we were their first European bank partners, and that first mover advantage has been very beneficial, because you also play a very big role as one of their first customers in helping to feedback on the product, say what's working, how can it be improved, and that sort of open, that open feedback loop is hugely important, and we find that as well, right? When we're building our technology, the on-credit intelligence suite, getting that feedback from the bank customers who are using it is hugely important. So those have sort of been two areas where I think when you're a very large institution, the likelihood is that you're not going to get the sign off to be the first the first customer of that new provider, and it's sort of the old adage, right? Nobody ever got fired for hiring IBM. So you have this this bias towards choosing a large monolithic provider just because it ticks certain boxes. Whereas I think if you're a smaller, more nimble organization, you potentially have the ability to test and experiment a bit more, obviously within the limits of compliance and due diligence, but having that ability to be a first mover, which perhaps wouldn't be possible for some of the larger institutions. They sort of want to see others test the waters and be the guinea pigs, and then if it all turns out okay, then they may be willing to to give it a go themselves.
Yeah, and that's really sums up finances. It's just pretty much everything is just mitigating risk, and being able to have that flexibility with reducing that risk while still being innovative is really exciting. And Andy, I've also got to get Feedzai's perspective of this, because obviously you guys work, as you said, with a lot of kind of, I want to use the phrase speedboat banks as well, kind of building a bank up from scratch with the technology. So I mean, what's it been like being on the inside of all those various different banks, and kind of looking at technology in a different way to all the other banks too?
Yeah, I think there's a few things that firstly, it's exciting. It's where we want to be, and we embrace the challenge. We're determined not to be a cookie cutter organization of almost like, well, we've built the software. If you want one, come and buy it. There you go. I mean, frankly, it's just dull, isn't it? And so we want to work with speedboat banks, people disrupting the market, because we want to be part of that disruptive presence. But you have to want to embrace it. You have to want to listen. You have to want to engage. You have to accept that the thing you're doing year one with them, it probably isn't going to be the thing that you're doing year three. Or if it is, it will look materially different. So design-wise, product-wise, it's vital that you don't hardwire too many things that are hard to unpick, and you think about the nature of the problem rather than the specifics, because it's important to think about it we need data to prevent fraud rather than there is this specific fraud type today, because the minute you get down to that level, you may have a really good outcome for 6 months, but the minute that adaptation occurs, either in the offering or in the criminal nature of the attack, you're not going to be able to pivot. So agility is obviously key, but I would say that's not only on the product side, that's also on the way you have the conversation and the way you really engage at a creative level. That's the word I'm thinking. It's important to engage at a creative level as well as at the solution level. I think that's where you can be successful.
It almost like it feels like it's coming back to that kind of mission ethos, that if it's within the bank to be able to be agile and to want to be agile and to continue to evolve, you're going to find that a lot easier to do. And Andy, if I could stick with you for this question, then Valentina brought up cloud-based technology and how that's enabled Oaknorth as well to kind of pivot, but also look at things in different ways to other institutions. Also being the first bank really to kind of get to that level. Are there any other broad benefits to moving to a cloud-based platform for a bank that maybe didn't start on the cloud but is certainly looking to migrate?
Yeah, definitely. And we're a cloud provider. Our solution is cloud first. There definitely are. I mean, one of the obvious ones is you can benefit from kind of central modeling, central data type solutions. So one of the things we can do is we can share best practice very easily without compromising things like GDPR, without compromising privacy, and ensuring that the bank's trust around their data stays as they want it to be. We're able to leverage central models, central solutions, and ultimately achieve better outcomes. I think Valentina touched on the others. You obviously scale up and down, and I think for a fast growing organization that doesn't quite know where they're going to grow or how they're going to grow, then that is key in protecting their cost position, but also in protecting their risk position. But I've had experiences, I'm not going to say which of the banks but I've had experiences where you're almost trying to debate whether you can afford to protect the risk you need to protect.
Yeah.
Cloud removes a lot of that tension and creates more of a virtuous relationship, because once data is there, you can use it propositionally, you can use it to provide better services, but you can also use it to maintain that credibility and ultimately to protect customers from bad outcomes. So I think, yes, it creates a more virtuous progression path, and I think it creates best practice in terms of financial crime protection, but also compliance, privacy, data as well. So I think a lot of those things get removed as detailed problems for the organisation as they grow.
Yeah, and it's just exciting to be able to know that finance is moving into that model rather than the monolithic kind of slow moving, less virtuous form of looking at risk. Now, we've discussed the technology, guys. We've discussed the talent. We've discussed the mission behind the bank. And Valentina, as you were saying, we don't want to dwell on the pandemic too much, but obviously now with that technology, with that talent, did that mean that organizations like Oaknorth were able to particularly help a lot of your customers out and go on and thrive effectively during the corona crisis because you were so well positioned with your mission, with your talent, and with that cloud-based infrastructure?
Yeah, and I think we obviously it was an unprecedented situation for every bank. So I think the sector as a whole has done phenomenally well and really stepped up in terms of supporting customers and supporting businesses. It was sort of an opportunity for the banking sector to right some of the wrongs of the financial crisis and rebuild some of that trust. They were the villains then, and this time they were, I wouldn't go as far as to say the heroes, but certainly some pretty heroic speed that was moved for banks, certainly. I think from our perspective, what it demonstrated is that, and really what it showed for the banking sector is that you can move incredibly quickly, cut a lot of red tape, be pretty innovative, without opening yourself up to additional risk or being non-compliant. There's again a tendency to sort of say, well, we have to go through this XYZ process to approve a new partner or to onboard a new technology. And obviously during the crisis, there was a view of, well, we have to move very quickly. Otherwise, we're not going to be able to support these customers. We're not going to be able to help them through this period. So we just need to get this done. And suddenly, these partnerships move to the top of the in tray, become the priority within the business. And I hope that speed and innovation and that ability, to cut some of the red tape will stay beyond the crisis. I think from Oaknorth Bank's perspective, we ended up completing, over $1 billion of net new loans last year. So we continue to see, double-digit growth in the loan book, and that was partially driven by government support loans through C-bills and CL bills, but the majority was through loans from businesses two businesses who were actually seeing opportunity in the crisis, right? Every crisis creates opportunities for growth. And the sad reality of that is, well, you might be a business, let's say a restaurant, a hotel, a care home, a nursery, and one of your competitors, goes out of business. There's potentially an opportunity to purchase those sites, to recruit that talent, to perhaps onboard some of their technology. So, there are opportunities like that. And we had a lot of customers who were saying, actually, this is, an opportunity for us to grow our portfolio, and to expand our business. And we have a number of very good success stories. One is obviously Leon, the healthy fast food chain.
Love them.
Hilariously, we actually provided a loan to them in August 2016. So, 2 months after the Brexit vote, another unprecedented event. And we sort of have supported them through that growth over the last few years and through the course of last year. And they were obviously acquired for £100 million. So a very successful exit for the business, and a great example of a growth story. And I think as a business, what it showed us is, in some ways from a talent perspective, we don't have to be limited to places where we have offices, right? We've hired people now, even across our leadership team, who we've met only once since. We hadn't met them before we hired them. We've only met them sort of in the last few months since we've been allowed to travel.
Yeah.
That's just not something that we would have ever considered doing previously, right? That you would have C-suite executives and hiring dozens of people virtually. And so in some ways, that means that the pool of talent has actually got, many multiples larger. And that gives you a big opportunity to hire people in, parts of the world which before you may not have been able to consider. And I think that's been a pretty eye-opening experience, not only for Oaknorth, but for many tech companies and other businesses. And we're finding that's just helping us to, especially in the sort of post-Brexit world, to enable us to get talent from many different parts of the world.
I think that's absolutely fascinating. And, to hear how effectively a bank can effectively reevaluate everything from where you can hire from to, different models on the fly like that within 19 months, different models of business, and just, really utilizing that and changing that. And I think it's absolutely fascinating as to where banking and finance is going to go in the future. And I guess, Andy, to kind of start wrapping up as well, we've heard really what Oaknorth has done over the last 19 months as well. How has Feedzai really helped a lot of different organizations in the same situation, and what's next for Feedzai too?
Yeah, I think we've had some of the similar benefits being distributed already. Distributed by design definitely helped. Certainly my experiences have been, we've been able to talk to customers that we wouldn't otherwise. There tended to be a culture of, if it's not face-to-face, it's not serious, especially at a senior level. Right now, I'd say I've built more relationships globally with customers than I ever would have done under the pandemic, simply because that culture of reaching out remotely is now established. So I would say that certainly has been beneficial. Specifically, we've helped some of our larger banks with issues that they've been wrestling with, mainly around COVID loans. The actual distribution of COVID money from governments has been a big challenge. How we make sure that gets to people quickly, because the old model doesn't apply. The authentication model doesn't apply. The verification model doesn't apply. So actually making sure that loans got distributed has been a significant part of Feedzai's support of a number of larger organizations that we've worked with globally. And I think the other thing as well is that classic move to digital has unfortunately created some vulnerable and at-risk populations, and we've worked very hard to make sure that they're protected. Those people who historically haven't wanted to do services online, and have been forced to do that. We've worked very hard to make sure that they're protected and to make sure that they do feel safe in those environments. So I would say those two big areas have been a huge area of focus for us in terms of our day-to-day work. And then we've been in a fortunate position of continuing to evolve. We want to make sure that we are using the latest technology. We invest over 20% of our 20% of our investment each year goes into research. We want to continue pushing those boundaries. And the other area we're working in heavily is actually how AI and machine learning will function across the globe, not only for financial crime, but as a whole. We're keen to be a voice in the direction of AI for the world as a whole, and that's really accelerated over the last year as well.
Yeah, and I think that automation across when people are operating digitally across the world, that's going to be so critical. Guys, I think we've come to time, but I just want to say a massive thank you for your insights. It's interesting that we've got to the point where we can kind of create a podcast where you can effectively learn the ingredients to creating a bank, and hear it from you guys. So I just want to say a massive thank you. And also a big thanks to our audience. Of course, you can catch the rest of the series and much more over at ffnews.com, and of course YouTube, but especially LinkedIn, where you'll see me in the comments. So have a chat. And so I've got to say, Andy, Valentina, thanks once again, and have a lovely rest of your day.
Thank you very much.